Good morning, everyone. Yesterday was a big hit. I posted a video about how to really learn about short interest and how to figure out the ratio of stocks that are long and short, and it was a big hit. So this morning, instead of doing my usual overview, I decided to do another session. I'm going to focus on today on what is my routine, my usual morning routine when I wake up before the market opens. I usually do this. Now, I'm in Eastern time. I used to be in California. I used to be in Pacific Coast time. But right now I'm in East Coast time. And fortunately, I still get a chance to wake up before the market opens, not right at the open. I mean, I used to wake up at 6 a.m. and then the market would open half hour later, 20 minutes later, 6:30 versus 9:30. So it was very difficult to do morning analysis. But now I wake up a few hours before the opening bell and I get to do plenty of morning analysis. And believe it or not, your morning analysis is going to be the biggest part of the day, because you know what? About 60 to 80% of all movement for the stock for the coming day is determined before the market opens. Everything that happens after the market opens is, well, not all, but most of it is noise. But before the market opens, that's where you can gain a true advantage of what can happen during the day. So I'm going to take you through my usual routine. I'm going to give you an overview, kind of get you in the mood for what I see. So the first thing I do every morning when I wake up, I look at the calendar. I look to see if there's a major report coming out. If you go to Econoday, us.econoday, by week, this link right here, you can just go to Econoday by week ASAP. You don't need to, this other stuff here doesn't need to be in there. You'll get this chart, and it's updated daily, and it's actually updated weekly, but it's free. It doesn't cost anything, and all you have to do is look at the little pink dots. If it's a pink dot or a red dot, depending on the color your monitor shows, I'm getting kind of like a salmon color here. All right, so these are the important reports. If it's green, it's not as important. If it's red, it's really important. So if I get if for example, today is the 18th, but let's just say, for example, today was the 19th or the 20th, I would look at the housing starts report. I would get an idea of what it looks like, and it would give me an estimate. It would give me a consensus range. And remember what I always tell you guys, the true number is never what the report is saying. The true number that everyone is looking for is the expectation of whether the number is going to beat or not beat the expectations, because the expectations are assumed to be the real data, usually 99% of the time before the report comes out. So it's kind of priced into the market already. The anticipation, the expectations, okay? And again, look at the consensus range and write it down. And that way you'll know right away when the report comes out. And a lot of these happen before the market opens, like at 8:30. So it'll give you a really good perspective. And I'll show you further on how we use this data. We compare it to the futures contract, but I'll talk about that in a bit. So again, the first thing I do every morning first thing I do is I look at the reports. I look at the consensus, and I look to see if the Fed is talking. If the Fed is talking, it could be important. Again, you'll see a little red or salmon color dash or dot underneath, and that's telling us it's an important report. It's a potential market moving report. As a general rule, not always, but as a general rule, the further we get into the week, the heavier the reports. Usually the biggest reports happen on Wednesday, Thursday, and Friday. Thursday and Friday tends to be the biggest one with jobless claims. And monthly, we have employment data. That's going to happen next week. But again, Thursday, Friday. But again, I look at it every day, because sometimes on Tuesday you have the FOMC meeting starting and so forth. So there's always something going on. This is really important, and it'll give you a good understanding of what the market is looking for. And if you can look at the market before the report comes out and afterwards, it'll give you a good perspective of what to expect. Finally, after that, I look at my overnight market news. Very important. And again, you could look at the overnight market move or you could look at the economic calendar before. There's really no order to that. They are the two most important things and they set the tone. This way I find out if there's China's reporting new viruses, 98 more deaths. It gives me a really good idea of what happened to the overnight European and Asian markets. Remember, markets never stop. They're always working. They're working around the clock. When our market closes, you've got the Asian markets opening, and then you've got the European markets opening, and so forth. And it's just a circle. So we get to see, by looking at the overnight market, looking at the overnight news, we get to see what part of that is going to play into the new trading session or the new day. So again, I look to see what Trump says. I look to see what Apple is doing. I get to see what China is talking about. All of this is in the overnight reports. I mean, it's something you have to read. And again, you can just go to barchart.com, go to news, go to top stories, and you'll see it. It's usually posted at between 4:30 in the morning and 6:30 in the morning, and it gets updated every half hour to an hour. But again, find the morning report. You don't have to use this one on Barchart, although I like the top stories on Barchart. You could use the one in New York Times. You could use the one in FinViz. There's tons and tons of these reports. Again, you don't have to pay for this, and I like the Barchart one because it focuses a lot on global economy, not just the stock market. So it's really important for that reason. The next thing I look at is the 10-year futures contract. Now, you could look at ticker symbol TLT, you could look at the 30-year note, or you could look at the 10-year. The 10-year futures has the most liquidity for a futures contract, and it tends to trade almost around the clock. So by looking at the futures contract, especially if I want to look at the one-day range, I could see what's been going on overnight. I could see if the overnight is pushing the asset lower. I could see if it's pushing the asset higher. I'll get a really good idea right here about what did I miss, what happened in the overnight session that could impact the market or can influence the market. Right now I'm seeing the bond market is ticking off just a little bit. It was, if we look at the 9-month time frame, or let's say the 6-month time frame, we could see it had a really strong top. It's been selling off, and right now it looks to open a little lower. And what I like to do is I like to mark these levels, the lows and the highs, the nightly levels, and also the last swing high and the last swing low. And I write those numbers down, and more importantly, I set alerts for those levels. So if I see that the bond market is going above or below the overnight data, that means something is going on, okay? Because remember, it's reacting to Chinese data, to European data. It's doing all of that. Finally, after I get done with the 10-year note, and again, you could use ticker symbol TLT. If you like to trade ETFs, you could look at the 30-year note, but the 10-year note futures is the most liquid. And if you want to find it, you just go to futures, you just go to financials right here, and it'll be right up there. Then we look at the S&P 500. Now, we obviously know why I'm looking at the S&P 500. I want to know if it's down before the open. This is what it's doing before the open. It's down. And I want to see why, and that way I get to look at the overnight news. I get to compare the overnight news with the S&P 500. I look at the global calendar, then I compare it to last night's data. And again, this is just a simple E-mini S&P. If you were to turn on Bloomberg or CNBC, you would see a little right box before the market opens, and it gives you the E-mini S&P. It gives you that premium because you want to know what the market is going to open. Then what I do is, again, I look at the one-day data. And what I want to do is I want to look at the all-time high of the last day. I want to look at the all-time low of the last day, the swing high and the swing low. And then I want to see what happened overnight. And again, I mark those numbers down and I set alerts. Well, I don't set alerts, but Craig, my assistant, sets alerts. And that way we know if the S&P 500 is going above or below the extended range. So that gives me my understanding of how the market, the bond market, and the S&P 500 is reacting to the news or the potential news that's going to happen today. And I can get a good gauge of how much volatility we're expecting. Are we expecting to go higher? Are we expecting to go lower? I create a game plan based on that. And again, I don't wait for the market to open. It's 8:13 in the morning right now, and I'm already formalizing a game plan, and the market doesn't even open for another hour and 15 minutes. Finally, I look at the put to call ratio. I want to get a sentiment to see if the overall market is overbought or oversold. I want to see how the sentiment is. I look to see if puts or calls are controlling the market. And as I've been telling you guys, or anybody who would listen to me, this is a primary random indicator. The only time it's valid is when you see the number above 125 or below 70, or below 75 actually. If it's below 75, it's telling us that bulls are very bullish and greedy. The market's really greedy and complacent. If it's above 125, it's telling us bears are controlling the market and traders are getting scared. So if you're looking at the S&P 500 and the 10-year note and the global data and the overnight market data, this will give you a good idea of what to expect. And again, if it's near 80 or 100 or 110 or even 77, it's just random. So don't put too much faith into this unless the numbers are really on the 125 or 75. They have to be all the way up or all the way down. Otherwise, it's just telling us markets are congested and we're not going to expect a lot of range. Then I look at the CBOE volatility index. This is the volatility. This tells us the implied volatility or the expected volatility of the S&P 500. So here I'm looking at the S&P 500 price, but here I'm looking at the expected volatility, and this goes very well with the fear and greed index because it's telling us if traders are getting more fearful or if they're getting greedier. If this goes higher, if this goes up to 20, that means markets are scared. If we're below 20, if we're in the 14 level, 15 level, that means markets are fairly complacent. Again, is this a really important indicator? Only when the numbers are above or sharply going above 20 or going below 15. When it's in a middle range, it's telling us don't expect too much volatility, don't expect a breakout, don't expect major trading action, expect a range-bound, directionless type of market. And again, once you're looking at all of these in this order, you'll get a really good idea of what to expect. And finally, I've got one more thing I look at, and that's the sectors. I look at the S&P, I look at the 10 major sectors. And you could look at this on a 5-day, on a 1 month, 3 months. And I like to look at it on a 5-day because I get to see which sectors are leading. I get to see which sectors are moving higher, if utilities, if defensive sectors are moving higher, consumer discretionary, which is very speculative. If utilities and consumer discretionary are next to each other, or tech is next to each other as it is right here, it's telling us, and tech was actually higher up, it's falling off now, which is a sign that's telling us that tech is overbought. But again, here I'm looking at all the players that make up the S&P, and this gives me a really good understanding of what sector is going to be popping, what sector is going to be falling, which sector the funds are putting their money into, all by looking at this on a 5-day, and a 10-year and a 20-year basis. So again, you could look at it year to date, which is really important. You could see that information technology has been leading. You could see that utilities have been lagging. And again, if you're seeing utilities and info technology, that's telling us markets are fragmented because this is the most speculative sector in info technology, and utilities are the most defensive. So again, you could pick all this up before the opening bell. And I'll do it again just to give you a quick analysis. We start with economic data, then we look at market data, and we can look at market data and then economic data. Usually the market data will give us a lot of what's going to be in the forthcoming economic report. So again, this gives us the scheduling. This tells us this gives us the schedule of what to expect and the consensus and the actual numbers by clicking on the button. And this gives us the daily events that happened overnight. Then we look at the 10-year T-note. And again, I like to look at it on a short-term basis, on a 1-day basis, and a long-term basis to get a good idea of what the market's doing, if it's congesting, if it's trading within range, and so forth. I move on to the S&P 500, and I do exactly the same thing. I look at it on a short-term basis. I get the highs and lows. I get the overnight highs and lows. I set alerts with those numbers, and that makes my day easier because then I could see if the market is violating crucial levels intraday without having to stare at the market. Then I look at sentiment indicators like the put-to-call ratio to see how fearful or nervous the market is. I look at the volatility index, again, to get that same perspective from just a different look. This is a more immediate, this just does the implied volatility, or this determines the implied volatility on the S&P 500. and then I look at each individual sectors. And again, I do all of this before the market opens. Why? Because what happens before the market opens is going to play out during market hours. Now, there's been some rumors. I know you guys have been hearing some rumors about me and a mystery trader regarding early morning calls that I make daily, like the ones I showed you today, how I generate. Now, up till now, I've never mentioned this guy by name, and boy, oh boy, this guy's got a name. It's about to change. I'm about to expose everything, and I'm going to introduce this guy to you guys. I'm going live Thursday at 1 p.m. Eastern Time. This week, you don't want to miss it out, and I'm going to expose this trader, and I'm going to expose how he earns thousands every day before the market opens. Remember what I told you. The big part of the trading action occurs before the session occurs, not after. This is why I spend so much time in my morning analysis. So you don't want to miss this. It's a one-time event. Make sure you click the button below. Check it out. Now, I've never had this guy on. You've never heard of his name, but this guy is a market wizard. When I say he's a market wizard, I'm not kidding. He's one of my most influential traders. I've been following this guy for a very long time. He is scary good. He's not just a good trader. He is scary good. Like, he looks at the market like a roadmap. If you guys think I'm good, this guy, he's amazing. He is amazing. I've known this guy for several years. He's amazing. I've mentioned his name privately in my VIP program a few times. But folks, it's all going to happen live. It's going to happen Thursday at 1 p.m. Eastern Time. He's going to show you how he's able to deliver, get this, not 70% accuracy, 93.2, up to 93.2% accuracy on his trades, and sometimes delivering 1,000% plus returns on individual trades. I'm not kidding you. You've got to check it out. You really don't want to miss this. Folks, if you want to learn how to trade, short-term trade, and read the market like a roadmap, you don't want to miss this. Honestly, this guy's had some of the biggest influence on my trading over the last 10 years. And how many times have you heard me say that? So you really don't want to miss this. This is a true legend, a true market wizard. You really, 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 you would be foolish to miss it. I'll leave it at that. Thursday, 1 p.m. Eastern Time. Follow the link below. The mystery will be exposed. Thursday, 1 p.m. Eastern Time. Don't miss out. Follow the link below. This will probably be one of the most exciting classes that I've ever had in my life. And I mean that from the bottom of my heart. I can't wait to do this. Talk to you guys soon. Take care, and I hope this helps. Folks, if you're enjoying this, send me an email. support@marketgeeks.com. I want feedback so I know what you guys want me to do in the future. Talk soon.